Before there were computers, algorithms, or global trading desks, there was Jesse Livermore, a man with no formal education, no connections, and no safety net. Yet he became one of the most iconic speculators in Wall Street history. He didn't just trade stocks, he decoded human behavior through price. He built, lost, and rebuilt massive fortunes, sometimes in a single decade. Livermore wasn't just chasing money. He was studying patterns, testing discipline, and learning the one truth most traders avoid. The market doesn't reward activity, it rewards clarity. His story is filled with triumphs and collapses. But more importantly, it's filled with timeless lessons, the kind that still apply whether you're trading from a pit, a desk, or a mobile screen. This isn't about nostalgia. This is about understanding how one man's insight a century ago can still sharpen your edge today. Welcome to the Livermore Code, 8 lessons that cut through the noise and take you straight to the core of what it means to survive and thrive in the game of speculation. When Jesse Livermore entered the markets, he did not bring luck or hope. He brought discipline, observation, and a rare ability to understand what others overlooked. He was not just placing trades, he was dissecting the emotional core of the market with surgical precision. Livermore did not chase price. He waited, he watched, and when the market revealed its hand, he struck with conviction. He understood something that most traders never grasp. The market is never wrong. Only opinions are. And when your opinion collides with price, the market wins every time. That was not a quote for inspiration. It was a principle he lived by. He never fought the tape, never argued with a trend. While others got emotional, he stayed objective. If the market contradicted his view, he changed his view. Fast, no ego, no hesitation. One of his greatest edges was patience. The biggest profits in his career came not from frequent trades, but from waiting for the moment when everything aligned. Livermore knew the real money was made in the sitting, not the trading. Amateurs feel they must always be in the market. Professionals know that cash is also a position. He would sit out for weeks, even months, and then enter only when the market screamed opportunity. He did not place trades based on hope. He acted based on confirmation. He waited for the market to validate his thesis. If it didn't, he walked away. When price moved with strength, when volume supported the breakout, when the emotional tide turned in his favor, then, and only then, would he commit serious capital. He did not try to predict the market. He aligned with it. He understood that trend is your greatest ally when confirmed by price and volume. Livermore was not a man chasing tick-by-tick profits. He was a strategist. He sought the large moves, the swings driven by mass psychology. He understood that price charts were not random. They were visual expressions of fear, greed, hope, and denial. He studied them like a radiologist studies an X-ray. Every line meant something. Every consolidation told a story. Every breakout whispered a message. He knew the crowd acted late. He positioned early, but not on impulse, on calculated anticipation. He never tried to be first. He aimed to be right, and when he was right, he pressed the advantage. He scaled in, not all at once. He watched how the market absorbed his position. If the trend strengthened, he increased size. If it faltered, he stepped aside. Livermore traded not with excitement, but with precision. His respect for risk was legendary. He knew how to take a loss. He never let a small mistake turn into a disaster. He believed that cutting a loss quickly was not weakness. It was intelligence. In his words, the most important lesson in trading is to play a losing hand like a professional. No anger, no revenge, no doubling down, just out. Cut the position, clear your head, protect your capital. Livermore understood that in this game, you are not paid for effort. You are paid for results, and those results come not from activity, but from clarity. He never chased trades. He waited for the market to come to him. He didn't need to force profits. He built systems, routines, and mental models that allowed him to thrive in chaos. Even in failure, he took full responsibility. He never blamed the market. He never blamed the news. He turned inward and asked the hard question, where did I lose discipline? Because that's what separates a pro from an amateur. Accountability, not just for your wins, but for your losses too. He believed that one big winning trade, when handled correctly, could pay for dozens of small losses. He was not focused on being right often. He focused on being right big. And when a real trend appeared, he did not scalp. He rode it. He did not fear volatility. He used it. He sized his positions not by greed, but by logic. In today's market, flooded with algorithms, social media noise, and emotional whiplash, Livermore's principles are more relevant than ever. Discipline, patience, precision. These are not outdated virtues. They are timeless truths. The market has changed in tools, but not in essence. Prices still move because people panic and people chase. And if you can understand that, if you can master yourself, then you can master the game. If Jesse Livermore were standing here today, looking over the shoulders of modern-day traders, jumping on hype, chasing signals they barely understand, he would say one thing: stop gambling and start thinking. The edge is not in the setup. The edge is in how you respond when the market tests your plan. That is what made him great. That is what keeps his lessons alive. Jesse Livermore never relied on tips. He did not chase headlines or rumors. His strategy was built from scratch, engineered by observation, refined by failure, and executed with surgical precision. Every move was a response to what the market was doing, not what he hoped it would do. He started with the rawest tool available to any trader: price itself. Price was his map. It told the story of supply and demand long before any newswire or analyst could. He would begin by watching the tape. In the early days, this meant sitting in front of the ticker for hours, just studying the way stocks moved. No charts, no indicators, just raw price. He trained his mind to notice changes in rhythm, speed, and reaction. If a stock rose on good volume and held its gains through the day, it caught his attention. If it dipped and rebounded strongly, even more so. Livermore knew that movement meant interest, and interest meant opportunity. From there, he built watch lists. Not with 100 names, just a handful of stocks showing real strength or weakness. He focused, he filtered, he didn't scatter his attention. He studied how each of them reacted to market conditions. He noted which names outperformed during down days. These were leaders. He tracked volume, momentum, and behavior around key levels. The market was his classroom. Price action was his textbook. Livermore understood that every great trade started long before entry. It began with preparation. He believed in building a case. He would monitor a stock for days, sometimes weeks, waiting for what he called the line of least resistance. It was that moment when all the elements clicked. The trend was clear. The volume supported the move. The market confirmed the direction. That was when he struck. Not early, not late, on time. His entries were never impulsive. They were based on confirmation. He let the market prove the move was real. Then he would take a starter position. Small, controlled, calculated. He never threw all his capital into the first attempt. He watched how the stock behaved after his entry. Did it move in his favor quickly? Did volume increase? Was the broader market aligned? If yes, he added. If not, he pulled back. His sizing was dynamic. It adjusted to the trade's behavior. That's how professionals think. They don't commit emotionally. They scale based on performance. And Livermore had an iron rule: never average down. If the trade moved against him, he exited. No questions, no excuses. He did not throw good money after bad. He believed that losing trades were part of the business, but doubling down on them was suicide. He accepted the loss and moved on, because his focus wasn't on this one trade. It was on the long game, the campaign, the strategy. He played like a chess master, not a gambler. His stop losses were mental, but absolute. He did not rely on machines or automation. He relied on discipline. When the trade broke structure or failed to behave as expected, he closed it. Not tomorrow, not after one more bounce, immediately. That's the level of clarity he operated with. There was no room for hesitation. In trading, hesitation is where fear and hope live, and Livermore had no use for either. When a trade worked, he let it breathe. He was not quick to take profits. He knew the rare trades that exploded in his favor paid for everything else. He called them the big swings. That's where real money was made, not in scalping for crumbs, but in holding through the noise while the trend matured. He followed price, not opinion, and if the trend stayed intact, he stayed in. Simple, ruthless, effective. He also read the market's context. He never looked at a stock in isolation. He asked, what is the general market doing? Are leading stocks confirming the move? Are institutions accumulating? Is sentiment extreme? Livermore always traded in the direction of least resistance, and that required situational awareness. You cannot fight the tide. He waited for the tide to turn and then surfed it with precision. His journals were his edge. He documented every thought, every trade, every mistake. Not to blame himself, but to study himself. He treated trading like a business. The market was his partner. His entries and exits were transactions. His edge came not just from price action, but from self-awareness. He knew when he was trading from logic and when he was reacting emotionally. He trained himself to recognize the difference. And when the market shifted, when volatility rose, when conditions changed, Livermore adapted. He was not married to any one style or stock. His strategy was not rigid. It was principled. That's what made it powerful. He never confused consistency with stubbornness. The best traders change when the market changes. Livermore did that better than anyone. He built his strategy the way an architect builds a skyscraper, on solid foundations, with structural integrity, and without shortcuts. It was never about copying others. It was about observing, thinking, testing, refining. He did not rely on anyone to tell him what to do. He relied on price, and price never lied. If he were here today, Livermore would not be chasing trending hashtags or buying every breakout blindly. He would be doing exactly what he always did, watching, waiting, planning, and executing with cold precision. Because in the end, the tools may evolve, but the principles stay the same. The market rewards clarity, not chaos. Strategy, not noise. Discipline, not emotion. That is the legacy of Jesse Livermore, and that is the model every serious trader must study. Jesse Livermore understood one truth better than most who ever sat in front of a price chart. Trading is not just about making money. It is about not losing everything when you are wrong. He approached risk management not as a checklist, but as a mindset. To him, capital was not just money. It was ammunition. It was survival. Without it, you had no seat at the table. And the market does not care how smart you are if you're broke. Every decision he made carried a calculated cost. Before he entered any position, he already knew where he would exit if he was wrong. That was not a maybe. It was a certainty. He never entered a trade without a predetermined risk point. If the market violated that line, he was out. No negotiation. That discipline is what kept him alive in a game where most burn out fast. He ran his capital like a business. Think about that. Most traders gamble. Livermore managed. He didn't focus on winning trades. He focused on sound trades. There's a difference. A winning trade can still be a bad trade if the risk was undefined or the entry was impulsive. A good trade, in contrast, follows the rules, aligns with the trend, respects size limits, and cuts off losses before they become toxic. That was Livermore's edge. He knew how to lose properly. He never allowed one bad decision to bleed into the rest of his system. He had a firewall between logic and emotion. When he lost money, he didn't double down. He didn't seek revenge on the market. He paused. He reviewed. He reset. If the drawdown was significant, he would step away from trading altogether for a few days. That was not weakness. That was wisdom. Because when your mind is clouded by frustration, your strategy becomes blind. Livermore treated risk as a dynamic element. He did not risk a fixed dollar amount across all trades. His size was adjusted based on the clarity of the setup, the volatility of the instrument, and the overall market environment. In uncertain times, he reduced exposure. In clean trending environments, he increased it, but never recklessly. Every move was measured. He thought in probabilities, not guarantees. That mindset alone separated him from the herd. He also believed deeply in protecting mental capital. After a tough loss or a series of failed trades, he would intentionally stop trading. Why? Because even if his account balance was intact, he knew his judgment might not be. The market punishes those who trade from anger, fear, or desperation. He refused to operate under those states. His clarity was more valuable than any setup on any screen. And when it came to drawdown, Livermore approached it like a crisis manager. He would not ignore the pain or mask the losses with false confidence. He dissected them. He wanted to understand why it happened. Was it market noise? Was it overtrading? Was it emotional interference? He believed every drawdown had a message, and if you failed to listen, it would only get louder next time. He kept detailed records, not just of prices or P&L, but of his thought process. That journal became his diagnostic tool. It helped him spot recurring mistakes, behavioral blind spots, and subtle emotional triggers that crept in when he got too comfortable or too aggressive. In that way, Livermore was not just a trader. He was a self-auditor. He understood that edge is perishable if left unchecked. Without accountability, every system breaks. One of the most misunderstood parts of Livermore's legacy is that he went broke more than once. People use that to discredit him, but they missed the lesson. The market humbled him, and instead of walking away bitter, he came back stronger. He did not see failure as final. He saw it as feedback. He rebuilt, he reinvented, he recommitted to the core principles that made him successful in the first place. That is the true power of risk management. It is not about eliminating failure. It is about ensuring that when failure comes, and it will, it does not destroy your career. Livermore survived because he treated every dollar as a decision. He understood that one undisciplined trade could unwind months of hard work, so he protected his downside like a fortress. He accepted that taking small losses was the price of staying in the game. He never sought perfection. He sought consistency. He knew that if he followed his process, the edge would play out over time. Some trades would win, others would lose, but the system, the philosophy, would remain profitable. That is how professionals think. They don't chase excitement, they chase longevity. And through it all, Livermore maintained emotional distance. He didn't celebrate too hard when he won. He didn't spiral when he lost. He kept his identity separate from his performance, because he knew the danger of ego. The moment you start to believe you're invincible, the market will find a way to prove you wrong. If you want to understand why Jesse Livermore is still studied a century later, it is not because he was always right. It is because he respected risk in a way that very few do. He played big when it made sense. He stepped aside when it didn't. He took losses with grace. And when he had to rebuild from nothing, he did so with clarity, not shame. Risk management is not a line item in a trading plan. It is the trading plan. It is the discipline to say no, the humility to accept when you're wrong, and the wisdom to preserve the one thing that matters most, your ability to keep playing the game tomorrow. That was Livermore. And that is what serious traders must become. Jesse Livermore understood long before the age of noise that the most valuable signal in the market is the one you discover on your own. He was not just a tape reader. He was a psychological engineer. He did not just study prices, he studied why people moved them. And he knew one critical truth. To truly see the market clearly, you must isolate yourself from the voices trying to tell you what it means. Livermore operated alone. He did not trade in rooms full of chatter. He did not rely on brokers whispering tips or analysts offering forecasts. He trusted one thing, price behavior. To him, price was truth. It required no explanation, no interpretation. If a stock broke out with volume, the reason didn't matter. If it failed to follow through, that mattered even more. He was immune to stories because he didn't need them. The chart told him everything. This level of clarity only came because he built walls between himself and the crowd. Not out of arrogance, but out of necessity. Livermore knew that the crowd was always late, always reactive, always emotional. And if you let their fear or euphoria leak into your own process, you no longer have a process. You have noise. He treated information like risk. Too much of it could kill your edge. He did not follow newspapers. He did not listen to market gossip. In fact, he went out of his way to avoid it. Not because he wasn't informed, but because he understood the cost of overexposure. The more noise you allow in, the more fragile your confidence becomes. And when your conviction is built on borrowed opinions, it crumbles under pressure. Livermore made sure his conviction came from within. His trading room was not filled with headlines. It was filled with price charts, journals, notes. That was it. Simplicity was his superpower. He believed complexity was the enemy of execution. Every additional input you allow into your decision loop increases hesitation. Every conflicting opinion slows reaction. And hesitation costs money. Livermore did not need confirmation from others. He needed confirmation from the market. That distinction made all the difference. When others waited for analysts to validate a move, he was already in. When others panicked at downgrades or short reports, he watched how price reacted. If it shrugged it off, that was all he needed to know. He didn't trade opinions. He traded reactions. He also understood the danger of consensus. When too many people agreed, it often meant the move was over. Livermore believed the best trades came when you were alone in your view, but the market was quietly confirming it. That moment when price starts behaving right, even though no one is talking about it, that was the sweet spot. He lived in that space, quiet, contrarian, precise. Even at the height of his success, Livermore avoided attention. He didn't seek fame, he sought clarity. Because he knew the market did not reward popularity, it rewarded edge, and edge only lives in solitude. That is why he often disappeared for weeks at a time. He would retreat, reflect, refine, then return sharper. It wasn't isolation, it was strategy. His self-reliance wasn't just tactical, it was philosophical. He believed that to win in the markets, you must trust yourself more than you trust anyone else. But trust is not born from ego, it's earned through preparation. He prepared relentlessly. He studied past trades, price patterns, volume signatures. He knew that when pressure came, and it always did, the only thing he could rely on was the structure he had built for himself. There were moments when Livermore took positions so bold the entire street watched, but he never asked for their approval. Because he understood that when you start needing the crowd to agree with you, you have already lost. Great trades often feel uncomfortable. Great traders are comfortable being uncomfortable. He once said, "A man must believe in himself and his judgment if he expects to make a living at this game." That quote is not about arrogance. It is about internal strength. It is about building a process so solid that external noise becomes irrelevant. That was Livermore's greatest advantage. Not just his timing, not just his size, but his ability to think clearly while others panicked. In today's world, flooded with live tweets, trading rooms, influencer calls, and algorithmic signals, Livermore's wisdom is more urgent than ever. The modern trader is drowning in information, but edge doesn't come from knowing more. It comes from feeling less pressure to react to everything you know. If Jesse Livermore were trading today, he would not be watching 15 screens, reading every hot take, or checking Reddit for signals. He would be sitting with a notebook, a clean chart, and a trained eye, waiting for the market to whisper, not shout. He would enter without fanfare and exit without explanation. Because results speak louder than predictions. That is the final lesson. Independent thinking is not a personality trait. It is a professional requirement. Livermore didn't win because he was lucky. He won because he protected the one thing that matters more than capital, clarity of mind. You cannot trade like everyone else and expect to outperform them. That is what he proved, time and time again. Jesse Livermore mastered something that eludes most traders for their entire careers, the ability to hold a winning position until the market itself says it's over. Most people can spot an entry, fewer can manage risk. But almost no one can ride a trend all the way through. Not because they lack skill, but because they lack emotional endurance. Livermore had it. He called it sitting tight, and it made him millions. He knew that catching the start of a big move was only part of the equation. The real money, the generational profits, came from staying in while others got shaken out. And that takes more than analysis. It takes emotional mastery. Because the longer a trade goes on, the more temptation arises. To take profits, to lock in gains, to be safe. Livermore understood that safety in profits is often just fear in disguise. He watched others sell too early. They'd grab a quick 10% and feel smart. He let that 10% pass. He wanted the 80, but he didn't guess at it. He waited for the price to confirm that strength was not just a spark, it was sustained fire. And when he found that kind of move, he held. Through noise, through pullbacks, through news. He didn't just hold, he added when the market proved him right. That's what most don't understand. Livermore did not scale out of winners, he scaled into them. He pyramided positions as price moved in his favor, but only when the action confirmed strength. No guessing, no greed, just calculated reinforcement of an already working idea. He did not chase. He let the market pull him deeper into profit by offering more confirmation with every leg higher. He once said, "It never was my thinking that made the big money for me. It always was my sitting." Think about that. He wasn't saying don't think. He was saying once you're in a good trade, the thinking stops and the patience begins. No tinkering, no second guessing, just quiet, steady conviction. That's what professionals do. They don't smother their winners, they nurture them. But to hold a trade that's working, you must silence every voice that says, "Take it now or you'll lose it." Livermore built that mental discipline by knowing the structure of the market he was trading. He didn't guess when to exit, he observed. If the stock continued making higher highs with strong volume, he stayed. If it paused but held key levels, he stayed. If the trend cracked technically, then he exited, not before. He understood that markets trend longer than most expect. Trends are driven by waves of participants entering at different stages. First come the professionals, then the early adopters, then the crowd, then the media, then the euphoria. Livermore wanted to be there for all of it, not just the start. He made his biggest fortunes riding those waves until the very end. Not flinching, not predicting, just following price like a compass. He treated his winning positions like assets. He protected them. Not with tight stops, but with trailing logic. He gave them room to breathe because he knew that volatility was part of the journey. If you sell every time a stock pulls back 2%, you'll never ride a 10-bagger. Livermore gave his trade space, but never without awareness. He watched like a hawk, not to panic, but to recognize the moment when character changed. That's key, the change in character. Livermore didn't exit because price dipped. He exited when behavior changed. Lower highs, fading volume, broken structures, these were signals that the trend was aging, that the energy was leaving the move, and only then did he start unwinding. He let the market tell him when the party was over, and until then, he stayed on the dance floor. His biggest wins did not come from luck. They came from alignment. The right stock in the right trend, in the right market environment, held with discipline until it had nothing more to give. That's edge. That's how you separate the amateurs from the professionals. Not in how you enter, but in how long you can stay when you're right. Livermore also knew that big trades test you more than small ones. You watch the profit grow. You start to imagine giving it all back. The fear of loss creeps in. He shut it down because he didn't focus on the dollar amount. He focused on the structure. As long as the structure was intact, the rest was noise. He didn't let the size of the gain distort the process. In a world obsessed with fast wins, Livermore played a different game. He bet big when he was right, but he waited to be right first. And when he was, he didn't flinch. That's why people still study him a century later. Not because he was perfect, but because he knew how to extract the full value of a winning idea. Most people leave with crumbs. He waited for the feast. If Jesse Livermore were trading today, he wouldn't be scalping pennies on tech stocks or closing winners after one green candle. He would find strength, confirm it with behavior, and hold. Through every news cycle, through every analyst downgrade, through every shaky hand. Because he understood and proved that the real wealth in trading comes not from being often right, but from being right and bold and patient all at once. Jesse Livermore didn't just trade prices. He traded behavior. He wasn't interested in why something happened. He was obsessed with how the market responded. That's what separated him from the crowd. While others reacted to the news, Livermore reacted to the reaction. He called it tape reading. Today, we'd call it price action psychology. But whatever the name, it was the skill that allowed him to follow smart money without ever needing to know who they were. He understood early on that markets don't move because of news. They move because of how traders interpret that news. That's why he never chased headlines. If bad news hit the tape and the stock refused to go down, that told him something powerful. Strong hands were absorbing supply. Selling pressure was being met by quiet accumulation. That's not theory, that's behavior, that's a signal. Likewise, if a stock couldn't rally on great news, Livermore didn't see opportunity, he saw distribution. To him, strength wasn't a headline, it was a sequence of price behaviors. Higher highs, rising volume, pullbacks that held support, and reactions that outpaced expectations. Weakness was the opposite. Rallies that failed, volume that faded, support that collapsed. He watched these tells like a poker player reading the table. He was not guessing. He was tracking money flow in real time. Not by watching who was buying, that was impossible in his era, but by watching how the market absorbed pressure. He could see footprints of institutions without ever knowing their names. Because price always tells the truth if you know how to listen. Livermore's tape reading wasn't about predicting tops or bottoms. It was about identifying moments of imbalance. Times when buyers were clearly overwhelming sellers, or when demand vanished into thin air. He looked for shifts in tempo, a change in volume rhythm, a new energy entering the stock. Those were his signals, not moving averages, not news alerts, behavioral clues. And he had no tolerance for hesitation. When the market showed its hand, he acted, but only when it spoke clearly. He never forced a trade. If the tape was noisy, he stood aside, because to him, clarity was currency and confusion was cost. That's what made his style so deadly. He didn't need to be right all the time. He just needed to be in sync with the rhythm of price. Livermore's edge came not from prediction, but from recognition. He didn't try to guess when a move would happen. He waited until it was already happening, and then rode it with confidence. Most traders want to be early. Livermore wanted to be right, and the price had to prove it before he committed size. He also paid attention to what stocks did after major events. If a stock gapped up on earnings and held its gains for several days, he took that seriously. If it broke out and volume stayed elevated, he knew large players were involved. But if volume dried up, if the breakout stalled, he knew the move was weak. He didn't assume, he observed. This was the core of his philosophy. The market always knows more than you do. It's not your job to explain price. It's your job to interpret it. And the only way to do that is to watch how it reacts under pressure. That's when truth is revealed, not in the press release, in the aftermath. Livermore trained himself to spot these micro shifts in behavior. He saw the market as a living organism, sometimes confident, sometimes nervous, sometimes euphoric. And he traded according to its mood, not his own. That's how he stayed detached. That's how he stayed in sync. Even today, with all the technology, the lesson hasn't changed. Price still reacts to expectations. Behavior still reveals intention. And if you can read that behavior with clarity, you don't need to predict. You just need to participate. If Livermore were alive now, he wouldn't be buried in 15 indicators. He'd be watching the order flow, the reaction to earnings, the resilience on red days. He'd look for names showing relative strength when the market was weak. He'd note which sectors were seeing accumulation. He'd ask, what is the market really telling me right now? Not, what do I hope it will do? And when the answer came, he wouldn't hesitate. He'd act with precision, because that's the job. Not to be emotional, not to be perfect, but to be present, to see the signals before they become obvious, and to move before the crowd fully understands what's happening. That was Livermore's real genius, not in calling tops or bottoms, but in understanding the market's behavior better than anyone else in the room, and having the courage to trade it without needing confirmation from anyone else. Jesse Livermore made fortunes in silence, not just during big trades, but in the spaces between them. He understood something that eludes most traders even after years in the market. The discipline to not trade is a position in itself. Cash wasn't just what he used to buy stocks. It was a strategic stance, a place of strength, not weakness. While the crowd chased every breakout and reacted to every dip, Livermore often did nothing. He watched, he studied, he waited, because he knew that action for the sake of action was the enemy of consistency. You don't get paid for activity. You get paid for clarity, and clarity takes time. He didn't trade every day. He didn't believe in forcing setups. He believed in waiting until the market presented something so obvious, so clean, so one-sided, that his only job was to step in and let it unfold. If that meant waiting days or weeks, so be it. He wasn't chasing opportunity. He was filtering noise. Livermore understood that markets go through phases. There are times when the tape is smooth, readable, directional, and there are times when it's chaotic, choppy, deceptive. Most traders don't adjust. They apply the same tactics across all environments and bleed slowly. Livermore didn't play that game. When the market didn't make sense, he stepped aside. He had a term for it, being out of the market. But he never saw that as being passive. He saw it as active risk management, because staying out of bad trades is just as valuable as being in good ones. Every time he didn't act on a false signal, he protected both his capital and his confidence. That's how careers are preserved. It takes humility to do nothing, to admit that the edge isn't there, that your setup isn't lining up, that the tape is unrateable. Most traders can't sit still. They fear missing out. Livermore didn't. He feared being wrong more than he feared being left out, and that mindset saved him from countless unnecessary losses. When volatility spiked but direction was absent, he didn't trade smaller. He didn't trade at all. Because he knew the market doesn't owe you clarity on your schedule. You wait for it, you earn it, and when it comes, you strike, not before. Some of his biggest trades came after long periods of complete inactivity, and that's the irony most don't grasp. The patience to wait often unlocks the size to act boldly when it counts. He didn't need 100 trades, he needed a few right ones, executed with size, clarity, and conviction. You can only do that if your mind isn't exhausted from chasing marginal setups. He also knew that sitting out helps you observe more objectively. When you're not in a position, you see the market for what it is, not what you want it to be. That detachment is essential. Livermore used flat periods to recalibrate, to study, to journal, to strengthen his internal compass. So when the next real opportunity came, he was sharp, not scrambled. He wasn't lazy, he wasn't passive, he was selective, ruthlessly so. Because he understood the real enemy of traders is not missing trades, it's taking too many that don't matter. Death by 1,000 cuts. He avoided that with one skill: strategic inactivity. Even in modern markets, the lesson holds. We live in a time of endless alerts, constant updates, infinite distraction. Everyone's trading something, somewhere, all the time. But most are just churning. Jesse Livermore would have ignored all of it. He would have waited until price told a story worth betting on. And then, quietly, decisively, he would act. That's how professionals operate. Not with more trades, with better trades. Trades that align with their edge, their timing, their preparation. Everything else is noise. So remember this: the courage to wait is the mark of maturity. Anyone can click the button. It takes real strength to stand down, to protect your capital, to protect your focus, to protect your edge. Livermore knew this. That's why he survived longer than most, and why his legacy still speaks across 100 years of market evolution. Because sometimes, the best move you'll ever make is no move at all. Jesse Livermore didn't just trade the markets. He battled the psychological toll of trading every single day. And that's what made him real. Not just a legend on a chart, but a man who understood that the greatest volatility is often not on the tape, it's in your own mind. He made millions, lost them, made them again, and through it all, the market never broke him. He broke himself. And that's the lesson too many traders learn too late. Mental capital is more fragile than financial capital. You can rebuild a bank account. Rebuilding your mind, that's a different war. After every major win, Livermore would retreat, not to celebrate, to reflect. Because he knew that success is a dangerous drug. It feeds overconfidence, distorts discipline, and convinces you that the rules no longer apply. The market punishes that belief, swiftly and without mercy. He once said, "There is nothing new on Wall Street. There can't be, because speculation is as old as the hills." But the part people forget is this: the danger doesn't come from the market changing. It comes from you changing when you win. The moment you start thinking you're invincible, the moment your ego swells larger than your process, you've already started losing. That's what happened to him. More than once. He admitted it. He wrote about it. After one of his biggest trades, he let his guard down. He stopped following his rules. He took advice. He took on positions without the same edge. Why? Because confidence morphed into arrogance. And the market made him pay. Not immediately, but inevitably. But Livermore didn't run from these breakdowns. He studied them. He wrote notes to himself, journals, warnings. He tried to engineer guardrails, mental risk management, because he knew the real enemy wasn't out there. It was in the mirror. And just as dangerous as overconfidence was despair, after a major drawdown, Livermore wouldn't just lose money. He'd lose momentum, his ability to trust his system, his instincts, even his judgment. That's what happens when you take big hits. Your clarity fractures. Every new opportunity feels like a trap. You hesitate, then you miss, then you spiral. He understood this spiral better than most. He knew trading wasn't just about capital preservation, it was about emotional preservation. When you lose too much confidence, you become reactionary. You chase, you revenge trade, you abandon the process you once swore by. That's how careers end. To protect himself, Livermore began building what today we'd call mental systems. He kept trading journals. He logged emotional states. He wrote down rules to follow after wins, and even more importantly, after losses. He created psychological contingency plans. When you're in a bad place, logic disappears, so you need to have logic written down before it's gone. But even with all of this, he was still human, still vulnerable. And yes, eventually, tragically, he lost that inner battle. Not to the market, to himself. That's the heaviest lesson in all of this. Trading success doesn't guarantee emotional survival. The same intensity that makes someone a great trader can also destroy them if left unchecked. Obsession, isolation, pressure, these are real costs, hidden costs, and Livermore bore them in silence. If he were alive today, he would have access to tools we take for granted: therapy, performance coaches, support networks. But he had none of that. He carried everything alone. That was his strength. That was also his curse. So what do we learn from this? That trading is not just charts and risk-reward ratios. It's also self-awareness, emotional regulation, and mental fitness. You have to monitor not just your equity curve, but your psychological equity. Are you still thinking clearly? Are you still following your plan? Are you still you? Livermore's final lesson is not about a stock pick or a trading tactic. It's this: you can master the market and still lose yourself in it. And that's why mental capital must be protected at all costs. Your system means nothing if your mind is burned out. Your edge disappears the moment your emotions take the wheel. That's not weakness. That's reality. Even for the best of us. Jesse Livermore taught us how to ride the waves of market behavior, but he also showed us what happens when you ignore the waves inside your own mind. To be a great trader, you must study both. And maybe, just maybe, the real victory in this game is learning how to win without losing yourself. Trading is often romanticized. People chase systems, signals, and shortcuts. But Jesse Livermore's life reminds us that this game is not about magic formulas. It's about discipline, patience, emotional resilience, and the courage to act when clarity appears, and to stand still when it doesn't. Across these 8 lessons, we didn't just learn how Livermore traded. We learned how he thought, how he suffered, how he grew, and ultimately how he paid the price for ignoring his own rules. His story is not just about wins and losses. It's about personal mastery, mental fortitude, and the never-ending fight between logic and emotion. Whether you're just starting out or already managing serious capital, these lessons are not history, they're mirrors. Because the markets haven't changed. People haven't changed. And the hardest part of trading remains the same: managing yourself. If Livermore taught us one thing, it's this: the game doesn't change, but you must. And if you want to keep growing in this game, mentally, strategically, and professionally, I invite you to subscribe to Trading Mindset Lab. This is not just another trading channel. It's where serious traders sharpen their thinking, master their behavior, and level up their entire game, one insight at a time. Subscribe now to Trading Mindset Lab. Hit the bell so you don't miss the next deep dive. Upgrade not just your strategy, but your identity as a trader. Let's keep the legacy alive, not by repeating Livermore's trades, but by living his mindset